Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome to Jim's Market Update here on WSI TV. I'm Jordan Bishop and I'm joined by Jim. How are you doing today, Jim?
Good, thanks. Thanks for having me.
Good. So let's run through this real quick. What we're looking at is a chart of the S&P 500, and right now the media have chosen to pair it with the action today with the coronavirus.
Right. So we need a reason for everything, and so it's very hard for financial commentators to just say, well, gold went up today, oil went down today, stocks went down today. They always got to attach it to something, so we need to be able to say, well, oh, that's why that happened then. So they're blaming this well overdue and albeit dramatic downturn on stocks on the coronavirus. As you've been following this for weeks now, I've been going on and on about, can we please have a healthy correction for months now? Mm-hmm. And finally we're getting one, and even then it's not that bad. It's way still too north actually for my liking of its 40-week moving average. So it's long overdue, and coronavirus may be a trigger for something that's already due, but that's really what it is.
Yeah, absolutely. And this is the weekly chart. So we were looking at a shelf before this episode, and there we've drawn it in. So that line of support, what do you make of that, Jim?
So yeah, there's a clear line here that it's come down to, and that as long as that holds, then it'll probably just keep on going upwards. And on the other hand, though, if it breaks that, then we can expect a further test, which could be down back where I think it should be as a healthy level, is around 3,100. So watch that space closely to see what happens next. It's not a bad entry point actually, because the market is very oversold right now in the short term. Right. The elastic band's really been pulled down a lot today. So if you want a little bet, that's with a tight stop loss just below that line at around 3,200. That's not a bad entry point for a short-term trade, actually.
Right.
But looking ahead, actually, well, first of all, this is very much still a bull market. I think that's the main thing. Because I think a lot of people might be running for the hills, and this is an extremely healthy chart, actually. It's just acting in a very, volatile kind of fashion. So the bull market's still intact. The uptrend is a little bit broken for right now, but it needed to reset.
Mm-hmm. Mm-hmm. Yeah, I mean, absolutely, it's a little bit of volatility. The S&P 500 is down 2.8% roughly. But again, it's just healthy. We need to see these buying opportunities because we want to buy stocks. We want to get in. Correct. We don't want to buy at the top. So let's zoom in a little bit here. I've got the daily chart. Jim, does this tell you anything else?
Yes, we'll just zoom in on the short-term thing here with it. The uptrend, as we can see there, that's been going on really not long after this brand new bull. We called this brand new bull market on September the 9th, and we've had this concerted uptrend with no real healthy corrections. What's happened now, though, is that clearly diagonal uptrend has been broken today. As long as it closes at that level, it's also below its 50-day moving average there, which is, not one to pay that much attention to, but I think it's significant in light of, what's been going on the last few months. As long as it closes there right now, then, like I say, that shelf, that horizontal line we saw there is its line in the sand right now.
Right.
But it's definitely called a halt to that, what was getting very steamy upwards trend,
Yeah, and of course people are going to be taking profits right now on this day when we see that. So, I mean, we're just reading the chart. As you said, you could have a little bet here, get in, and see how it goes with a tight stop loss. Yeah. So let's move on. Let's talk about gold here. We're looking at the ticker GLD to represent gold. Jim, what's going on with this chart?
So we've been calling an uptrend in gold now again for months and months. You see here actually the upward trend in gold started at the middle of 2019. And we've had this delightful stepping action, a very orderly upwards trend, and it shot up today. Okay, yeah, perhaps on the back of, it might have been, again, like the stock market, helped a little bit by coronavirus fears. Mm-hmm. But, gold flying is old news. It's just now they were choosing to attach it to something. this is an aggressive uptrend. It's a little bit overbought right now, if anything. And what typically is going to happen is people will read these headlines and think, oh, I'll go and buy gold then, and they'll be getting it probably too high a time. This boat set sail months ago when we called it. That's what happened. That's what you get for reacting to headlines.
Right. Yeah. I mean, we did give multiple entry points. I know the one most recently was in December. So if you would have got in there, you're taking a tidy profit. You're sitting on a nice profit right now. Bonds look very similar to this chart. GLD. Bonds are going up. So I mean,
everything's going up that isn't now to the floor. We've got stocks, bonds, golds, pretty much like. What's interesting is that why are all these things happening? I mean, if dollar's going up and the gold are going up, those two should be in the opposite. So something is definitely up here, and it could be early signs of inflation that gold is telling us about. Right. But on general, though, we're seeing a lot of capital coming to America, into American stocks, into the dollar, into American bonds. While other countries aren't seeing the same prosperity in the same sort of things.
Right.
So there is a if you wanted to look at a big picture thing here, we're seeing signs of that aren't good. The retail sector is still going sideways. We've got China that's obviously even in deeper trouble now. And we've got copper that's in a distinct downtrend, which is usually seen as a sign of economic activity. So we're getting this, two different stories going on here. And, what we could be seeing is that, no, there is, definitely some economic, worries ahead. And what's distorting that picture is capital as a reaction to that flying to America and just artificially perhaps pushing everything, holding everything upwards, but remains to be seen. We're not going to second guess anything.
Right. I mean, either way, we'll be watching the chart because that's telling the truth.
Right.
We'll be steering clear of those media headlines that they keep just pasting together with the next crisis or issue as you have it. So yeah, don't panic, I guess would be the main.
Yeah, we're still in a bull market until we see otherwise, just like we did in October 2018. When it's time to get out, we'll say to get out. But in the meantime, if you're not in this, you're depriving yourself of a lot of profits. The main thing is you're getting in at low risk entry points at times that we're telling you to, and then riding it as long as possible.
Exactly. So Jim, thank you so much for your analysis today.
Thanks for having me.
We'll talk to you next time.
See you next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.